You've heard the buzz about dividends, right? They're not just tiny bonuses, they can be your financial game changers. Imagine living a life where dividends cover your major expenses. Sounds dreamy? Stay with us as we uncover the allure of monthly dividends and introduce you to 6 dividend champions that might change your financial story. Welcome to Dividend and Conquer, your source for financial empowerment. In this video, we'll discuss Dividend Powerhouse, your path to rent-free living with monthly dividends. Let's dive in. First off, what on earth are monthly dividend stocks? Simply put, they're stocks that reward investors with dividends every month, rather than the usual quarterly or yearly payouts. These gems are often birthed by companies with consistent cash inflows aiming to consistently line their shareholders' pockets. Why are they so coveted? A monthly cash injection means more predictable finances, a boon especially for those looking for a steady income source. Additionally, these dividends can be reinvested, unlocking the magic of compounding, turbocharging your wealth growth. Considering diving into this world, a few pointers to bear in mind. Dividend yield. This gives a sense of your potential earnings relative to the stock price. A high yield is enticing, but ensure it's sustainable. Stability. Solid financials, consistent profitability, and a robust business model are hallmarks of companies likely to maintain, if not raise, their dividends. Growth potential. While steady dividends are nice, stocks with appreciation potential can be the cherry on top. If you're finding this guide enlightening, please consider subscribing to Dividend and Conquer for more deep dives and financial insights. Now, the moment you've been waiting for, the 6 monthly dividend titans. Stag Industrial, a real estate investment trust REIT with a keen eye for industrial properties. The digital boom has fueled demand for their warehouses, making them a dividend powerhouse. Realty Income. Donned the monthly dividend company, they've showcased an impressive streak of 600 uninterrupted monthly dividends. Their recent strategic acquisitions hint at brighter dividend days ahead. Oxford Square Capital. This business development company meticulously chooses mid-sized companies for investments, striking a balance between size and opportunity. Orchid Island Capital. They're specialists in residential mortgage-backed securities. A ticket into the real estate world without buying actual properties. Armor Residential Rate. Delving into government-backed residential mortgages, their rate structure ensures bountiful, regular dividends. San Juan Basan Royalty Trust. A unique entry, their worth is tied to the fossil fuels resting beneath the earth. Their earnings rise and dip with energy prices, making them a potentially lucrative but volatile pick. Wondering how much you'd need to pocket $2,000 monthly? Taking an average yield from our 6 stars, an investment of roughly $177,646, should do the trick. That's financial freedom knocking on your door. If you're thinking, I don't have anywhere close to $177,646 to invest, don't click away just yet. Let's deep dive a little more into the world of dividend investing and explore how even smaller investments can have profound impacts over time. Harnessing the power of compound interest. One of the most incredible aspects of investing, especially in dividend-yielding stocks, is the magic of compound interest. It's often referred to as the 8th wonder of the world. Compound interest works on the principle that interest is added back to the principal sum, allowing interest to be earned on that added interest during the next compounding period. Imagine if you started with a more modest sum, say $10,000. Even if you didn't add a single dollar after your initial investment, the reinvestment of your dividends could grow your portfolio exponentially over time. By selecting dividend-yielding stocks that have a history of consistent dividend growth and reinvesting those dividends, you could be looking at a portfolio that not only grows in value but provides ever-increasing income streams. This strategy is particularly beneficial for those planning for long-term goals, like retirement. Diversification, not putting all your eggs in one basket. While the stocks mentioned provide promising dividends, it's crucial to understand the importance of diversification. Investing all your funds into 1 or 2 stocks can be a risky move. The stock market is unpredictable, and companies, even those with a stable past, can face unforeseen challenges. Spreading your investment across a variety of sectors and companies can mitigate this risk. Remember, the idea is not to chase the highest dividend yield, but to build a robust, resilient portfolio that can weather the ups and downs of the market. The emotional aspect of investing. Investing isn't just about numbers and percentages, there's a significant emotional component. Watching the market fluctuate can be a roller coaster of emotions, from the highs of seeing your portfolio grow to the lows when there's a market downturn. It's vital to approach investing with a clear strategy and a long-term perspective. Reacting impulsively to short-term market movements can disrupt your investment strategy and potential returns. It's often said that it's not about timing the market, but time in the market. So remain patient, stay informed, and keep your investment goals in sight. Remember that you're not on this journey alone. Surrounding yourself with a community of like-minded investors can provide invaluable support. Share experiences, learn from others, and get insights that you might not have come across on your own. If you've enjoyed the insights from this video, consider joining our Dividend and Conquer community on YouTube, where we discuss, dissect, and dive deep into the world of dividend investing. The role of Dividend Aristocrats in your portfolio. For those unfamiliar with the term, Dividend Aristocrats refers to companies in the S&P 500 that have not only paid, but also increased their dividends for at least 25 consecutive years. These companies are typically large-cap blue-chip stocks that have a long history of financial stability and growth. Examples include household names like Procter & Gamble, Johnson & Johnson, and Coca-Cola. Including Dividend Aristocrats in your portfolio can offer a level of stability. Their consistent dividend growth indicates strong financial health, and their long-standing market presence means they have weathered economic downturns and still come out strong. When you're unsure about where to begin or how to balance your portfolio, considering these stalwarts can be a wise move. Global opportunities and dividend growth. While U.S. dividend stocks, especially the aforementioned Dividend Aristocrats, offer stability and growth, don't overlook international opportunities. Markets in Europe, Asia, and other regions have their own set of Dividend Aristocrats and growth stocks. Diversifying globally can provide your portfolio with a broader base and access to growth in emerging markets. However, as with all investment opportunities, it's crucial to conduct thorough research. Different countries have different regulations, economic conditions, and market dynamics that can affect stock performance and dividend payouts. Consider investing in global dividend ETFs as a way to diversify without having to pick individual foreign stocks. As you continue on your dividend journey, be open to exploring these global markets, but ensure you're informed and making choices that align with your overall investment goals and risk tolerance. Bonus tip. One often overlooked strategy in dividend investing is diversifying not just by sector, but also by payment schedules. Some companies pay monthly, others quarterly or annually. By carefully selecting a mix, you can ensure a steady flow of dividend income throughout the year. This approach can help in managing cash flow, especially for those who rely on dividends for living expenses. It's like setting up your own personal paycheck schedule. Always research the consistency and sustainability of these payments before diving in, as a regular payment schedule is only beneficial if the company remains a reliable payer. As we wrap up, let's ponder this. How have dividends played a role in shaping your investment journey so far? And are you considering exploring global dividend opportunities based on what you've learned today? We'd love to hear your thoughts and experiences, so please leave a comment below sharing your dividend stories or answering these questions. Thank you for joining us on this dividend journey today. If you found this video valuable, don't forget to hit that like button. And if you want to conquer the world of dividends with us, hit that subscribe button and become a part of our growing community. At Dividend and Conquer, we're all about helping you navigate the investment landscape, one dividend at a time. Until next time.